before we go any further, just introduce our brand new panelists up at the front here. So, directly beside me we have Doug Alexander, XL Catlin. So, Doug is the digital enterprise architect at XL Catlin and part of the digital team within Global Technology. That digital team works with insurtech startups and various service provider companies to both understand emerging technologies and how they can be applied to transform the company's business model. Next over, we have Andre McGregor of TLDR Capital. I'm Andre. So Andre manages security practice for TLDR Capital, which is a global investment and advisory firm that specializes in blockchain tokenization projects and their interface with public markets. Before joining TLDR, Andre was head of IT security at Tanium, a multinational cybersecurity company, prior to which he was an FBI cyber special agent in New York City, before he also worked as supervisory special agent at FBI headquarters over in Washington, D.C. Welcome, Andre. Next to him, we have Chris Mayato over from EY. So Chris is the leader of the advisory practice in the Bahamas, British Virgin Islands, and Cayman Islands sub-area of Ernst & Young's financial services organization. He's based here in Bermuda. He has over 17 years' experience in providing legal, regulatory, and compliance advice and transformation projects to the financial services industry. And lastly, over there at the end, far away from me, is Hatem Jabsheh, COO of IGI. So Hatem began his career in 2001 with Spear, Leeds, and Kellogg's, subsidiary of Goldman Sachs, where he managed several pits as a CBOE and CME primary market maker. After that, he moved over to Amman in Jordan to set up Indemise Brokerage, an asset management and brokerage company. And after he sold that to a publicly traded investment bank over in 2009, he joined IGI to head up their investment department and as other COO. Welcome, Hatem. Well, thank you, everyone, for joining me on this other panel. So this is about the risks and rewards. So actually, how are we going to actually use blockchain in insurance, and how will that really look as we go into it? So first, from a sort of operational standpoint, Doug, you must have been looking at this about, we've talked a lot about the concept behind it and where it might be most useful, but where specifically, in your opinion, is blockchain going to be most applicable from helping our reinsurers?
I think from the XL Catlin side, on my personal side, and the other panel kind of hit it, is it's starting with the operational efficiencies, kind of the basics. And from when we started with our journey with blockchain, we found a customer that was excited about it. We had some internal customers, some external customers, and we tried to define what are some no-regret things that, frankly, we're going to prove the technology, prove the value, and build a business case that we could extend with. We started in the seeded placement to just on an internal process, and we also knew that we couldn't start with, like, to go out there and say, hey, we're going to do all the seeded placements on a blockchain externally. The market wasn't mature enough for that, our brokers weren't. But what we did is we essentially did it on their behalf internally with some kind of dummy test data. So we could prove that the reconciliation and the settlement and all of that was working well for us, and then just kind of raise the awareness and raise excitement, and thanks to Dave and for helping with that a couple years ago. And then about the same time, EY approached us about, with Maersk as an opportunity to advance in the marine space, where there's inefficiencies. Maersk was really pushing that as an opportunity with us. We had a strong partnership with Maersk, still do. But it was, hey, let's figure out how we can use this as a vehicle to transform. But it was the same thing, starting small, learning from that experience, and then gradually that we got that over the finish line, and finally that's live, real happy about it. And now it's a piece of how do we extend that and build it beyond. So I think it's just like anything. It's starting small, figuring out some conceptual problem that everyone can address and wrap their heads around, and then figure out how to build on that.
So, can I bring up a problem that I see that we haven't solved, but I think blockchain will solve? Security and the fact that we keep a lot of our data in systems that are either compromised or going to be compromised, and we don't actually implement cryptology and encryption the way that we wish that we did. The idea around blockchain, the fact that I can have loads of data that is very important, and it's cryptographically pure, immutable, and controlled, is the only thing that's keeping us from allowing the bad guys to really take everything that we have. Unfortunately, when we have traditional databases, we have traditional systems. At the end of the day, as much as we talk about encryption at rest or encryption in transit, at some point in time you log into a machine, and when you log into that machine, it's no longer encrypted. It's open. And so when I run malware on that machine, even though I have an encrypted database, I still have an open pipe that allows me to log in and then go in, and then, by the way, the adversary now has access that way. Whereas if I have a series of public and private keys that are controlled by not only the user but also the system owner, then I completely remove that entire layer because I have a lot of hashing of data. And I say to myself, okay, I need to get some information for an insurance claim. I need identity information. Well, I don't actually need to ask that person to send private information over a public link. I don't have to, have some sort of concern of whether or not they'll be compromised, but instead I can go and look at a hash that's already been identified, confirmed as being true, whether it's by a government agency or by my company itself, and use that single-handedly to conduct my transaction and sort of streamline all the operational issues that I think probably cost you guys a lot of money.
Let's add one big concern that you've just hit on is that the core security element, right? It's about having your data, about owning the data. Why is it that the blockchain is the solution to this? Why is it not a more secure database? Why is it not having more stronger systems? What is it specifically about blockchain?
It's funny because I'm laughing because when Anthony was giving his example of how he's shocked at binders walking across the street, I actually said, man, I miss those days because you can't hack paper. At least not easily. You can with a gun. But in all seriousness, that's our inherent problem is we have all this data sitting on systems, and these systems are old. We're moving into ways of saying, okay, let's talk about enterprise data warehouse. I think that was actually mentioned in the last panel. Really cool, really data lakes. These are words that we're talking about now. But at the end of the day, GDPR comes in the mix and says, well, you can't have everyone have access to that, and we don't know how to control things, and oh wait, we need to move quickly because we're hyper growth and we want to actually keep up with business. So just let everyone have access to that and we'll figure it out later. And then you run into situations where the developers want to take that data and use it specifically to build more projects, and now that data is out there, and then, oh wait, I completely forgot that I didn't secure my AWS S3 bucket of data that was there, and it's in the public, and there you go, you just got a breach that now named your entire branch. So the answer is, at the end of the day, the only way that we will ensure that everyone across all skill levels has secure environments is through cryptography. And who would have thought that I am now the cool guy as a computer engineer today, when in 2004 I was talking to a friend and I said, telling girls that I'm a computer engineer is just not, it's not working. Maybe if I became an FBI agent, that did work. But now, being a blockchain is actually even better.
Well, and it's something that is being used properly. And I thought Doug touched on it. What EY did with Maersk very recently was a kind of a bit of a landmark within the insurance industry. You're actually doing something. Can you talk us through how you came about, what the sort of impetus was to do this with Maersk and with Xceedance and other partners?
We've been sitting here in this panel, the previous panel, talking about blockchain in the insurance industry, but I think the driver is actually not going to be coming from the insurance industry. It's going to be coming from all the industries that buy insurance, which is what drove sort of the partnership and discussion with Maersk. They understood that they had a pretty big logistical challenge that was costly, with a lot of touch points, a lot of data elements, and trying to write hull or even contents insurance, cargo insurance was a real big challenge where, every one of their shipments going out, it could be up to 120 days look back in terms of repricing of some of the insurance risks. And so they were the ones that really drove this, hey, what is it about this blockchain that's going to take costs out of our market and industry? Insurance happened to be a step in the process. It's not an application designed only for insurance. I think the vision and view is it's going to turn the shipping industry on its head at the end of the day. It's really about taking the inefficiencies about the logistics and supply chain management that come with Maersk's business. Part of that is insurance. And so, I heard the previous panel talk a little bit about the insurance industry and their unwillingness sometimes to adapt to change. And I really think the industries that really are the big players and buyers of insurance are really going to drive the industry, as it's an element of every business that we do and every transaction that we do. Mm-hmm. And so that was kind of really the impetus for the Maersk project. There's others out there as well. We've got other insurance carriers from a global fronting organization that's looking at doing a blockchain. We're working on that now with them, a blockchain solution that will assist in fronting in over 86 different countries and jurisdictions. So again, it's more about the industry, that was buying insurance was driving the ask of that organization, which then drove to say, okay, we need to look at this, we need to do something because the people who are buying from us want. So I think that's a little bit of a different view, at least from my perspective. It's not necessarily about the insurance industry, it's about everything around it.
And well, Hatem, from your point of view, it's interesting, from the carrier, from the C-suite perspective, when you guys are talking about blockchain, what are you talking about it from? What angle are you coming at it from?
Well, in my company, I'm the only one talking about blockchain. we're a tiny company as compared to the likes of XL Catlin and the market movers. So we're not really a market mover. What we started doing a couple of years ago is really looking at the various frameworks. When we started looking into it, I had to first of all make management understand that there's something called cryptocurrency and there's something called blockchain. And I don't want to look at the cryptocurrency. I just want to look at the actual blockchain frameworks. Us as a company, we look at it from the angle that we want to use it for more cost efficiency. We're not a market leader. We can't set prices. Companies like the likes of XL Catlin and the AIGs of the world and all that can set prices, so we look at it from more of a cost efficiency perspective because that's really what we're in control over. And as margins have become squeezed over the last few years, the only thing that we can control is our internal costs. And we find that blockchain can give that to us. It also can give us the transparency that we would like, to Andre, the security that we would like, and the ease of doing business. So we can facilitate to quickly respond to our clients, whether from a quoting perspective or a claims payment perspective. We face sometimes, since we're on many of the policies, we're not claims agreement parties and we're not leaders. A broker would notify a leader of a claim, but then we would not be notified for 6 months that there is that claim. Through the blockchain, whoever is on that policy will know immediately whether any change in information or any additional information or any endorsements, amendments, whatever. So that's what we look for. We're blockchain agnostic. We don't care what blockchain anybody's using. We would look for. I would hope that people in the industry would create interoperable blockchains. So basically, I utilize then an app. I'm not a techie, so and we would be able to communicate with all our carriers, all our reinsurers, all our clients, through an app of some sort rather than directly engage in a blockchain program or something. But for us, it just makes life much easier.
Yeah. Matt, I realize I did not answer your question of why we can't use just a standard database. Yeah. So if you think about like KYC, for example, I have insurance across multiple planes, personally and professionally. Why do I have to store the same information in multiple databases? And then also, at a certain point, be concerned that that database is either controlled by one single entity that could be shared amongst others, or that that data is put in 5 different silos, of which I may trust Aon, but I may not trust, some other company.
Nicely played, nicely played.
I'll just pick a Russian company. In all seriousness, though, I can't, as a consumer, have trust in any of you because I don't know you. I have to trust the institution, which is what insurance is based off of. I mean, that's what allows for this to happen. But at a certain point, you will be breached if you have not been already. And I've worked a breach at every major bank, period, in the last 7 years. And so at some point in time, you are or will be breached. And we've come to the point where it's just numb. You're just like, okay, like my information's out. What are you going to do with my, personal social security number or home address? A lot, but we don't think about it, and we just became numb to it. But if we can actually use cryptographic hashing to be able to completely secure all of our data, not only do you have a shared platform, so now I can just have a single place where I can go and say, okay, I'm looking to combat fraud in insurance, which I can only imagine is something that you spend a lot of time talking about, thinking about, and actually dealing with. In one single place that everyone is talking on the same sheet of music, then I have to go to the Lloyd's database and I have to ask them, did you get a claim on this? And then I have to go to Chubb and I have to go to Travelers. Like, that's all time that goes back to the operational side where we're all losing money.
Is that something then, from those, when you're looking at actually building something, you're like on a company of the scale of XL Catlin where the data you hold is too big to think about, quite frankly, how do you even begin to approach to build a workable platform for something like this?
It's same thing. It's baby steps. It's it's part of it's the awareness and communication. Our security guys there is serious as any security team that's out there, and part of the challenge that we have with some of the emerging technologies, just like I'm sure anybody has, is trying to get the maturity of the organization brought up so they're comfortable with it. And then it's decomposing what is that risk, what type of data you're going to put out there, do you really need this, can you use dummy data, can you use obfuscated data, how long is it going to be out there? So those are the types of questions that we ask, but there isn't one simple way to answer it, because in short it really depends. But what we're finally seeing is, from a maturity side, we got over the hump a couple of years ago of being more comfortable with the cloud. And we kind of had a pivotal moment when we spent a day with Google a year or so ago. And we had our security guys, we had our IT and business leaders out there. And one of our business leaders is had the platform of, hey, cloud is bad, cloud is insecure. And the Google experts stood up and said, hey, we have whatever it is, 200 PhDs in data security, and we are the most targeted platform next to Microsoft every single day. Here's what we do. What do you guys do? And it was one of these moments where it's like our back-end legacy systems that we're all excited about, they've been around for 30 years, we think they're the most secure, but I think that's a huge liability. So there's the security risk and the technology risk and the business risk of staying behind and not moving along. Because I think, just like the gentleman was talking about Lemonade, those companies may not have it today, but they're going to get it and they're going to figure it out. And I think having that nimbleness and speed is really going to enable them. And if we don't figure it out, our legacy is really going to take us out.
Because when people are coming to you and they're asking about how do we approach this and how do we do it, what are you telling them when you say, should you be using blockchain for this problem, or are there specific bits where you're targeting and saying that, hey, that's the bit where you should be looking at, this is the bit where this is actually going to change your business, to help your expense ratio?
Sure.
Example.
Great question, because we do see a lot of organizations come out, and just dealt with a client the other day who sort of called up and rang up and said, hey, we've heard about blockchain, we want to implement the blockchain. Do you know what it is and what's the problem? And they come to find out that it was a smaller issue within the organization. And so, it is about picking the right tool for the right problem that you have. Blockchain is not going to solve everything. It's also, there's challenges around, it does take costs out when there's scale and there's ubiquity across the system and multiple stakeholders are engaged and involved. But for smaller organizations, you do need to have a thoughtful process about, does blockchain make sense for us, or what other technology for right now makes sense for us? Are we going to spend the time, effort, and money to build a private network, to go ahead and solve a small problem, or things like automation, through robotics, another element of what we could probably implement in a shorter-term solution. So it's an interesting question. It really depends what the problem is and how pervasive it is, as well as how big the organization is. Some organizations, blockchain developers are not easy to come by at the end of the day, and so it really figuring out, is it the right technology for you for that problem, and how much outside of your organization is it going to be impacted?
So, I just want to echo, it's a good point of, blockchain isn't going to solve everything. There is still going to be a need for an Excel spreadsheet. There's still going to be a need for a SQL or NoSQL database structure, or relational database. Because where blockchain comes in is the partnership level, right? Do I want to, if it's just going to be contained within a single entity or a single group, then you should use traditional tools. But if I need to spread that access, I need to spread that data across multiple potentially untrusted networks and untrusted environments to get to the trusted people that need to conduct transactions, then that's what you want to do. And then you have both the idea of a public blockchain, where I can have my KYC personal data that's encrypted and allows everyone to access it to be able to conduct transactions. And then I have permissioned or private blockchains where I'm the government. I'm not going to open this up. I'm an insurance broker, and I want to communicate with the underwriters. I'm not going to open that up because I need to keep it contained and private for a specific reason, regulatory or otherwise. But I still need to communicate cross borders. I still need to communicate cross people. Like that's where you actually get a lot of success here. It's not going to be, blockchain for this. We want to avoid saying the Uber of and the Airbnb for skateboards. Like, that sounds awful, but every startup in Silicon Valley doing the Sand Hill Road Shuffle describes their startup that way. And it's like, are you actually fixing a problem, or are you just copying something that's already there and just trying to reap some sort of financial benefit out of it?
And I also just want to come back to sort of add on to what was commentary that larger organizations will see benefits in blockchain. Global organizations that have a lot of inefficiencies internally. The banks are looking at it. The large insurance companies and brokerages are looking at it as well. So there are opportunities. I just want to clarify that, making sure that you are leveraging the right tool for the right issue. And there are opportunities for organizations to implement. We're working with, I think, over 80 different projects right now on proof of values and proof of concepts around the implementation of blockchain within organizations to solve operational inefficiencies for companies. So there are the benefits of blockchain in organizations. It's just, again, like any technology, it's picking the right tool for the right problem.
I think one thing that's important to stress too is yeah, it's another tool in the toolbox, but the operational efficiencies and re-engineering and process re-engineering is really where you should start with all this. And we had the people that come up to us and say, hey, I want a blockchain too. And so then you start unpacking that conversation, and it's like, well, you have a really, really bad process. And these are things that we could and should do. And by the way, blockchain doesn't fit, but here's how you should think about it. And I think if done correctly, blockchain eventually just kind of fades into the background, where it's just another piece of technology that's enabling things, and then gradually we all forget about it. But it's a great, exciting time, because honestly, no one knows what it is. No one understands how it works for the most part. And the industry is extremely curious about this one particular currency, or this one concept. And I don't know if it's because of the currency or because of the association with potentially bad guys using it. But that was the original. We had a real negative reaction internally when we were talking about it, because we're like, oh, isn't that for drug dealers? But what's the relevance for insurance? But we kind of figured it out. But it's that curiosity in the journey which kind of helps get that culture that's going to drive the innovation. And so that, I think, is an important thing. But it's a great opportunity to use it as a catalyst.
And just to add as well to Doug and Chris, we as a company we're a small company, so we're looking at blockchain and its benefits, but it doesn't necessarily fit for me right now as a company. I'm too small. I need many adopters to come in and have it mature as a framework, and people the likes of the large reinsurers like XL, Catlin, and those companies who have more resources than we do, who can leverage their power with the EYs of this world and with the security firms, and further develop this. So we don't find it as a tool for us right now as a company, but we are implementing tools, and we are re-engineering our business process, through data scrapping of policy information, so we don't have to manually upload stuff, to claims management, fraud, and using artificial intelligence and all that. So we're still in our early days with the blockchain framework, but again, it's not a tool for everyone to use right now, and we are on this journey with the rest of the market, but we found out that before we even want to really explore the applicability of blockchain, we need to re-engineer our business process. And what I'm seeing in the application of blockchain within our industry, or the people that are selling it, as a framework, I would like to see them say more of that out there, because it's one thing to put your current process on blockchain. You're not going to get anything out of it. You need to rethink the whole process and the way you interact with your brokers, with your clients, and all that, and then go and figure out the right framework and how you're going to use it.
That's something that requires an awful lot of buy-in, not just in the sense of the actual investment, the time and effort you put into it, but for everybody to get on board with that. This is something that's big. It's to actually get it going is the difficult part, you say? Is that it's actually, it's not the concept, it's the application.
Well, that's why it's nice to work at a small shop. There are not many decision makers. So I get to tell my teams, go do this, and go do that. But any type of technology is, and when you want to go to your board of directors or your executive team and tell them, look, you know what, I'm going to scrap all my legacy systems. I'm going to spend millions and millions on brand new systems. And let me tell you something, odds are against me. From right out of the gate, my risk of failure is huge, and that's what we've been doing for the past 6-7 years. But as you show them the benefits of what the technology is, you need some quick wins and show them these benefits, so then they start buying in. So when it came down to us starting to investigate blockchain, all the execs were like, you're wasting your time. Focus on something real for our business. And I'm like, well, this can be a potentially disruptive technology. And if we're not at least aware of it, and we don't educate ourselves on it, then if and when it comes to hit us, we'd know how to do this. So what I did was I got a small little young team, a group of people, that I told them, like, research as much as you can about blockchain. And then when they were like, okay, I'm like, okay, do me a presentation on what blockchain is. And then that started people talking about it. And so then I had them go and start presenting to the board, to the executive teams, to all the employees and all that. And everyone started looking at it, and we got the buy-in that, okay, this thing has some legs. And it is going to come into our industry. And we will have to, whether it's now, 3 years from now, 5 years from now, we'll have to adopt it as part of our infrastructure.
I have to say, a year ago today, I was a blockchain naysayer. You realize cyber special agent New York has some of the best FBI cases ever. Everyone's trying to take down New York in some capacity. Our cyber branch took down Anonymous and LulzSec, Silk Road. When we were investigating all of those, we associated Bitcoin with money laundering, terrorism. We still associate it with money laundering and terrorism. We can't kind of shift too far in the conversation about blockchain before we get into cryptocurrency, and then we get into Bitcoin, and then we get into the spike, and then we get into money laundering and terrorism and things like that. But what's interesting is, when you look at the technology, and I think Anthony mentioned it before on the panel before, it's good. It works. But what's also amazing about this is that this is the first time we're actually having a technological conversation in the business world. I promise that if I asked everyone in this room to explain to me how the internet works, I bet you I'd get 10 people that would get it right. I mean, because the whole idea is we have this underlying TCP IP protocol and we set apps on top of it, but I just want to go to Yahoo and get my information. I don't realize that images are downloaded and I'm doing an exchange and all this other stuff and handshakes, but it just works. This is the only time in technological history that we're actually having a technical conversation to business people that actually want to understand how the technology works, but this mainly because you have these ideas of a smart contract, right? We talk about parametric insurance and an if-then statement of if this happens and do this, but we're so used to the contracts of the four corners of the document of saying, well, if it's not there, no, it didn't happen. I had many judges where I'm like, no, but it's there. And he's like, well, the search warrant's not the search warrant, it's not on the four corners, so we're not gonna rewrite it. We're used to that, but now we have to essentially rewrite how we do contracts in a technical way that leads to us to be able to actually execute processes, and we have to understand what that means. The reason why Lemonade is going to be successful, we all laughed at it earlier, but the reason why Lemonade is going to be successful, they can lose all the money in the world. They just have some smart people that are willing to take a chance and spend some money, and then someone in here is going to buy them. And then it's going to go off, and we're going to, oh, geez, we completely should have bought them. But that's what's going to happen. You have to think that the best thing that the insurance company could do right now is what hedge funds and financial industry leaders have done with quants. Go find some smart MIT mathematicians and computer scientists and bring them into your shop. You guys have amazing data. You guys have better data than most people, but you just don't have the speed in which to move, right? You're very much like the government, where was it the CDC director in the 90s said if it was left to the US government to cure polio, we'd have the best iron lung ever, but no vaccine. Because we're just kind of slow. We need to have that innovation and someone to kind of take that chance. So I guess someone's going to buy Lemonade, and we're all going to be sad that we didn't actually hop on that bandwagon quick enough. How do we actually get ahead of that so that someone in here is the leader at a time when everyone's thinking, I don't want to take that chance?
Well, let's throw it out. We've got a little bit of time left for some questions. Let's throw it out and see if anybody is that person, if they want to put their hand up. Who's going to buy Lemonade? Let me in on the action as well. So just up there right at the back.
Hi, that was very interesting, thank you. We haven't spoken, or you haven't spoken about any of the platforms. So, and the underlying protocols that are deployed in different blockchain platforms, proof of stake, proof of work, public versus private, R3/4 as a ledger versus being an actual blockchain, etc. I think it would be very useful to address some of those issues and also some of the benefits and sort of fallbacks So scalability, transaction processing times on the public Ethereum network versus being a very robust security protocol. Private chains perhaps having weaker security because they're easier for a 51% attack. These kind of issues, we touch on some of that will be good.
I'm going to be the awful person in the room and say that there is no possible way that we could cover all of that in like a short amount of time without doing it and do it any justice. This sounds crazy, but if you go to YouTube and you type blockchain and whatever, you will get a video of someone who spent way more time than they probably should explaining this concept. I had to actually change the oil filter in my Volkswagen Touareg, and I was like, I found a video on YouTube that someone let me show you. I'm like, you have more time. Look at the 51% attack, look at the different ledgers, look at the proof of work, proof of stake. But the idea essentially is, at the end of the day, this is my prediction. This is like a VHS beta max fight. And at the end, between Bitcoin and Ethereum, they're both going to lose. And someone else is going to kind of emerge as like a leader to allow for the latency issues with proof of work and the time delay to be able to actually process all of that. That's what he's essentially saying, is that every time you process a block, you actually have to do computing power, and that computing power takes time. And so if I have to process my ATM withdrawal using Bitcoin, it takes like 10 minutes, and no one has 10 minutes, we barely have 10 seconds. And so proof of stake now sort of just takes parts of that and says, hey, I can just quickly sort of say that this is legitimate without going through the entire computational platform. And by the way, all of these computational platforms need to be managed at above 51% of the computers, because mathematically, if I have 51% of the computers that are bad guys, they're actually able to lie about the processing. So you want 51% of the computers that are processing all of this computing power in this distributed network to be the good guys. So I actually did explain all of that.
Another thing just to add, I used to trade in the financial markets since I was a teenager, or younger than a teenager. And this, I was in San Francisco a couple of months ago, and I met with all these blockchain investors and developers, and they're all a bunch of young people. But they're all excited about this. And I used to tell them, like, this reminds me of the March 2000 dot-com bubble, the crash, where you had, in the mid-90s to late 90s, all these companies coming out, floating on the, on the NASDAQ, and all the internet companies raising all this money, and they're having hundreds of millions of dollars in valuations, if not billions, and then after the 2000 crash, you're left with 10. 10 or 15 companies, the Googles of this world, the Facebooks, and whatnot. And this seems, the situation we're in right now seems very similar to me, at least personally. So you've got, I think, over 1,500 coins out there. You've got multiples of blockchain frameworks, each one trying to solve a certain thing. I think over the next few years, this will all crash. And the real frameworks, the strongest of them all will survive.
Well, this is crash. It's not like we're going to lose all this money.
No.
Money's still in the system, so everyone kind of thinks that we're all going to go to zero. It's not going to go completely to zero. But you're going to see the pets.com. That was the big one in the .com, that when that came out, everyone put a lot of money in, and it was a crappy website. And that was the beginning of the .com bust, was that one single-handed website that was there.
But I'm sorry to say, but the people that are in crypto are going to lose a lot of money, and in the speculative cryptos and the speculative coins.
I joke, and maybe I'm young enough to understand a little bit, but old enough to realize I would never do it myself, that you have, essentially these 18-year-olds that decided to put their entire net worth, which is not a lot at the time, I'm sure, for many 18-year-olds, into what I would assume is scratch-offs, or a lot, the equivalent of, and like Bitcoin, and then all of a sudden it just spiked, and essentially 5 years later, you're like, well, yeah, you made a lot of money. Why did you put $20,000 in scratch-offs? I mean, you had no idea that was actually gonna work. But now you have all these young kids that essentially are walking around with this money, and it creates FOMO. So you're missing out. So we will have many more of these conversations as a result of that. But the key to all of this is there is a cryptocurrency conversation, and then there's a blockchain protocol conversation, and two can be very different. However, they do overlap, because at the end of the day, with all the clients that we service, I've got more questions about the insurance side of cryptocurrency and blockchain than I do about many other sides. Like, can we insure cold storage wallets, right? Like, how do we do that? Do we do it like diamonds, where if you lose it, it's just gone? And then what would the premium look like for that? Would you accept virtual currency, cryptocurrency for premiums? Actually, would you?
Show of hands. Who? Yes. Who says yeah? You would accept some Bitcoin in lieu of premium.
So
1, 2.
And that's you're absolutely right, because today in the morning I was talking to somebody out in Portland, Oregon, who's coming up with this huge, I don't know, huge blockchain framework, and he was talking to me. He's like, "Would you insure my coins against cyber attacks, failure to deliver or whatever?" And I'm like, well, I have no idea. I don't do cybersecurity, first of all. But then now you're going to add this to the mix, and it's pretty tough. But I am all for crypto in the insurance market, but pegged to a fiat currency. So if you're a British-based company, you peg it to the pound. So you create this treasury system. And everyone opts into this treasury system. So I'm a U.S. dollar-based company, so I'll peg my coin against I'll buy the coin that's pegged against the U.S. dollar.
Right, so we should accept virtual currency because you just do an immediate transfer to fiat currency at the time in which you receive it, and it should be the value in which you expect it for it to be. And ideally, if you're holding on to that money anyway, and you're hoping for it to go up like gold or oil, you make out. I don't know why we wouldn't want to make out on that. There is the opposite end of it, and then you've got the whole idea of just ensuring the cold wall of storage, kind of like a baseball card. I mean, it's the value that we give it and the value that it could drop, but it is a value that should be insured.
It's true. We've got time just maybe for one more question. Anybody else? We've got just right over here. Thank you.
Yeah, I was, this is, I guess, for Andre, and although anyone could answer. What do you think the shelf life of blockchain is? And what I'm asking, in essence, is do you think cryptography will always stay ahead of, say, advances in quantum computing or something like that? What do you see as the threat to blockchain?
That is the threat to encryption. So, some people put it at 10 years that we'll actually have quantum computing. Some people say 5 years. There's actually a really good research facility, University of Waterloo, that has, if you ever have some free time and make it up there or just research it, they're doing some great advances in quantum computing. The minute that actually works, consider all of the systems that we have today completely dead. Because it can be cracked in seconds at that point, whatever we've encrypted. That being said, yes, we should work on quantum proofing our lives. Unfortunately, for large enterprises, we have such legacy systems that, don't even have passwords, right? There's authentication problems beyond even encryption that once quantum computing comes into place, we're kind of screwed. So hopefully the insurance market is actually doing some sort of hedging on this, because it will happen, and when it does, that's going to be like end of days. Ideal. Oh, you guys joke, but Hurricane Sandy happened, and I was a fireman in my town. I've been a fireman for 12 years, volunteer, and in my pretty affluent town of East Brunswick, New Jersey, you would have thought that it was end of days. Like, people were getting into fights at the gas lines. People were coming to the firehouse trying to charge their phones. Like, people couldn't do without. And we actually ran out of money in ATMs on the island of Manhattan. Every ATM ran out of money because everyone, when the first storm happened, went to ATMs to go get money. Now that's been mitigated, and the Federal Reserve Bank keeps about $4 billion in cash on the island to make sure that doesn't happen again. But no one thought that was going to happen. But just go back to your primal, thoughts of what we would do when something bad happens, and it does happen. So now think about all the systems that we had in place now have to be shut down. You have no access to money. You have no access to resources. You have no access to security cameras. You have all the stuff that was normally protected completely offline because I can't turn it on because I can't trust the environment. It will be an end-of-days situation that we have to deal with unless we start thinking about quantum.
Isn't there a company under your? I can't forget I forget the name, but isn't there a company out of Canada that's supposed to be launching this summer the first consumer quantum computer?
Yes.
Yeah.
And they're working with University of Waterloo.
University of Waterloo. Okay. Thank you.
Yeah. Good. I think we've got.
Sorry, I was getting the mic.
Okay, we've run right at the back. Already got the mic. You're in charge. Go for it.
That's great.
Is that
I'm Andre, and then my wonderful friends.
So I did a blockchain project with my team to do a gap analysis between ChainThat and what we do right now. We had some very interesting findings. So essentially we thought that if it were to happen, maybe 30% of the jobs would change. But we couldn't actually find out what the cost was to implement blockchain. But you brought up a very interesting point. So back in the day when you built relational databases, it was more efficient and it was more energy efficient. Is that true? More or less.
Yeah.
So now if you have, and I understand the crypto part totally, and I agree with you 100%, but if we have 2,000 participants on a blockchain, and we have 2,000 nodes, and we have 2,000 sets of the same data, does that now create an energy problem and a cost problem as the blockchain scales?
I mean,
Sorry.
when you say energy, you're talking about actual energy? You're talking about energy of people and resources to actually do the work?
Actual energy, because every time you do a transaction, there's a cost.
Electricity.
Nanocents or
Yeah.
nanometers, right? So if now you have to do those transactions 2,000 times and create 2,000 different storage of the same information, I was just wondering if there's a cost element to that.
We have not at all expected that we would have IoT the way that it is and the experiences that we are having there. We are actually talking about allowing for nanonites to be in your blood system to actually cure various ailments that you have, and each one would have an IP address. Very scary, but it's actually being worked on. And so when we created IPv6, because we ran out of IPs in IPv4,
Right, yeah.
we said we have a range so wide and so vast that we will never run out of IP addresses. And can you believe that we are fearful that we're going to run out of IP addresses in IPv6? So the answer to your question is, sure, it is going to cause that, but I think we're also going to mitigate it on the other end with other ways of dealing with the energy consumption issue. Yeah.
Yeah,
What I'll make would be that on the IBM website, you can actually choose to write algorithms on quantum computers. So I agree with you. When that day comes, it's going to change the landscape completely. Thank you.
Unfortunately, we've run out of time. We're going to go for a quick coffee break. If everybody wants to go outside, first, quick round of applause for everybody. Thank you very much.